What we try and do here on Pre-Market Prep is put things into perspective. Well, we're down 30 handles right now, but what about the ridiculous run up on the close on Friday? I think maybe it started from 56.40. So we just need to calm down a little bit, starting the day in the red, see what the catalyst will be for the upcoming session. I mean, we're not going to sit around and wait till Friday for the jobs number, right? We got to go over some earnings reports. Not really any today, Z scaler after the close. We're starting out on Tuesday. It's a T3 Tuesday. Red Dog joining us. He'll talk about his strategies for the week. Let's get things started here. It's Pre-Market Prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right. Down 29.25 handles. Boy, I don't know how long I've been saying this, but look at that resistance up there. Holy mackerel. You look at your SPY. We'll just throw the SPY up there too. I mean, just to illustrate this. Holy mackerel. The roadblock to all-time high. Just trimming off the lows of the session. As I said, down 29, 56.32. Buck been kind of quiet lately, but we are in the green by 13 cents. I actually have a 4-day rally going. TLT flat, 96.52. Crude in the red by a buck, 72.48. Coming back towards the low of the moves under 72. Gold in the red by 660 at 25.22. Silver, well, it tried at 30. It failed, down 48 cents at 28.670. And Bitcoin futures, volatile week last week, back under 60K. Up $425 at 59,405. And Dennis, I know you always say, "Oh, I don't have a very good memory," but when I was looking at the move on today, man, that close on Friday, where there's just monster buying balances and no selling balances.
There was just buyers on the close. There was some mix of sell and balances, but those basically flipped to buy on the close too. So there was just a lot of buyers into the end of the month. And we often talk about movement, on the close, end of third Friday, end of month, end of quarter. End of month, they were jacking it up. They were so excited to really jack it up for August because we know how ugly August was when it started. And then obviously after August 5th, we were up the entire month. So you had the worst basically 2-3 days start to August basically in years, and then we got it all back and obviously closed at the highs. So that's what they wanted to do, get it jacked up so it just looks great. Maybe we can even touch an all-time high. We weren't even that far from it, Joel, but they didn't quite get it there. And now September comes. September, historically the worst month of the year for stocks. Starting off with a whimper here. AB's in the background. His camera's still. He's going to get the camera fixed today. Technical support is coming in for that, but he does have does have his mic going, so he is hiding in the background too. AB, how was the long weekend?
The long weekend was really good until yesterday on Monday. I woke up. Maybe my body was just not used to, not being in the office on a Monday because I just did not feel great. And today, second day in a row. So we'll see what happens. Hopefully it's just a little, 2-day thing, and I'll be feeling better tomorrow. But yeah, we're gonna get the camera fixed, so looking forward to that. How was your guys' long weekend? Anything fun?
Boating. I did lots of boating. Friday, Saturday, out on the islands, beaches, just unbelievable Saturday. Sunday was windy and Monday was a little bit windy, so stayed off the boat those days. But Saturday was just an awesome day. Had a couple friends come up. Beautiful. Joel, how's the weekend?
Busy. Busier than it should be for an old man like me.
Did you go to the game on Saturday, Joel?
I did not go to the game on Saturday.
Wow, you go to a mall.
No, nope. I had the old double wedding trick.
Wow.
Yeah.
Pull it off?
Yep. Well, we went to the party for the one wedding on Saturday in Milwaukee. I flew to Milwaukee Saturday morning, man. That's a hop, skip, and a jump. Shout out to all the people in Milwaukee. It's a nice town. Took a super early flight. Lisa wasn't too thrilled about that. Went to the rehearsal dinner there. Very, very good, close family friends. and they had Michigan the game on all over the place. So I didn't miss it. Then we got up 6 in the morning on Sunday. There we flew back, and my best buddy in this area, son got married Sunday night. So we were gigging hard late on Sunday night and just kind of lazy yesterday. So I'm a little bit. I'm not. It's gonna take me a little day or two, but yeah, a little too much travel. But I'm back and feeling good, and I am ready for what's going to be an exciting week in the markets.
Yeah, and we're getting some weakness to start. Tom Lee, cautious. The eternal bull that he is talking about a little bit of caution the next 2 months. Talking about, I thought I saw a 7 to 10% pullback that he was talking about here. But remember, he's still predicting the small caps are going to rise 45% this year. So if he's getting a 7 to 10% pullback here in the overall market, the small cap's going to have a lot of work to do in November and December. But Tom Lee turning a little bit cautious here. Small caps are trading down significantly here this morning. Lots of reasons. Don't call it the Tom Lee sell-off because we were selling off here at 4 a.m. this morning. Kind of very again overnight. Every time we get a rally in China stocks, it's just another selling opportunity, and that proves to be the case once again. Alibaba almost kisses that 85 on Friday, right back down to 81. AB just punishing us for being hodlers and not traders of Baba. We could have been making $3-4 multiple times here on our Baba position, but we hodl, and eventually the losses just come back to us. Europe.
Yeah, Europe too. But you know what I think the biggest drag on this market right now? And it's getting asked about in the chat. I think it's Nvidia. Like last week the world was going to be saved by Nvidia earnings. And I was a little bit sarcastic about it, right? And it's just like the AI trading, like he must have had 97 option experts talking about their bullish strategies, yada, 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 right? Here's the bottom line with Nvidia. It didn't go up on earnings. It didn't go to 140. It didn't go to 150. It didn't go to 160. I mean, the report was okay, but when you have reports like you've had in the past, you really needed to blow it away. Also, they're mentioning SMCI. So I got the chart up here. Just like the S&Ps found the sellers at the 5670 area, people found 130. That was their stopping point. They weren't moving. And now you are at the low from after the earnings report. And I mentioned this yesterday. You got a whole 117 here. The two lows in the same area. If not, I expect us to, retrace. How low we go, I don't know. But that's your number now, 117. So I think whatever geopolitical, whatever you want to talk about, I think right now the focus, Nvidia isn't ripping. If Nvidia was ripping, everything would be fine.
It is Nvidia's market still, and we can say the focus is away from it. We can dream that market breadth broadening out is going to bring the S&Ps higher, but it's just not the math. And we did the math for you last week on the show. It's 40. What do we say? Over 40%. The top stocks. I mean, it's all tech. S&P is basically tech index now. Now, IWM doesn't care as much about NVIDIA. There is stocks that can go up without NVIDIA. But if you're looking at S&P and saying, I think the S&P is going to go higher, but I think NVIDIA is going to go lower, that math doesn't add up. NVIDIA still controls the S&P. And the S&P is indeed leaking because NVIDIA can't get, steady. And I think you're right, Joe, at the 117. I mean, we start breaching that, and we always undercut. You can always see the undercut and rally, too, like go down to 115 back to 118. But I think, it's feeling tired. It's just been such a good year. I mean, we called NVIDIA, at least I called it very well, starting the year. It was in my acronym. I bought at 400. I bought at 500. I bought at 600. I've lightened up. The majority of the position. And the reason is just the valuation has just gotten very stretched. A lot of good news has been priced in. Stocks go from 40 to 140. They don't go to 240 as easy. I think the easy money has been made in NVIDIA. I still think the stock can go higher. That's why I didn't sell the entire position. I still think it can eventually go higher, but I think it's got some work to do. Like, why not 6 months to a year of consolidation here? Why not a pullback? Why not reload? Maybe we get a shot back down at 91 low. Maybe it's possible. Like, people ask me, when are you rebuying NVIDIA? Because they know I've sold some. When are you rebuying? When are you rebuying? When are you rebuying? I was like, when the valuation becomes more reasonable. It's not reasonable anymore. I was buying at 24 times earnings forward, folks, when the thing was 400. It's trading up near 38, 40 times now. The valuation is stretched. I'm still a value investor at heart. And I
As
just
hard
think
as
these
it is,
valuations stretch.
yep, yep. And also just before we move on with this, I mean, if you look at the mega cap tech, Apple's holding on, right? All the brouhaha, they got the new event or whatever. But look at Microsoft trading at 13 times revenue. I mean, what's he going to have to do
That's
to? Yeah, I mean, that's super expensive.
the
The
most it's been in years, like a lot of
Google,
years.
Google. Hey, don't tell me, Google rallied off the August 7th low. Look at Google down here, much closer to the low of the move than the high of the move. Amazon, it got its nice pop. That was about its half back. And that's telling you it's going to all time high. And then the other one that's hanging in there is Meta, right? And Meta's closer to its all time high as well. And then what do you know? The only beast in the burden is Warren, and that's down 64 cents. So your Mag 7 is not your leader here. It's more like your Mag 5. So putting everything into perspective.
It's just been such a good year for stocks, too. Like, I mean, what do you guys want? I mean, the S&P, what's the S&P up this year? 466, 563. It's been a hell of a year. It's been a great year. Now, can we broaden out and can we finish strong? I think so. Am I liquidating my portfolio and calling for a huge pullback, even 7-10%? I don't know. I think we just need to pause for a bit, catch a breather, let valuations, let earnings catch up with some of these valuations to a certain extent. But there's a reason that the smartest investor of all time, Warren Buffett, has the highest cash proportion that he's had in a very long time. Because the companies that you really want to own, the growth companies, aren't cheap. And then if you can go and you can look at the value stuff, yeah, there's some cheap stuff there, but that stuff just doesn't have a sexy story. And this market always wants a sexy story. So there's still pockets of strength, though. And there's stocks that we'll talk about here today that I think can move higher and stocks that have bottomed. But I think if you're sitting here and thinking mega cap tech is going to lead the way, like it did, I think we're due for a pause. Maybe it's seasonality. Maybe we just have a September, 45-day pause here. And then probably Santa Claus, November starts where it starts to show seasonality and starts to look better. Maybe it's time to move to the sidelines for a few weeks here. And then maybe November we start looking again. Like I don't, and obviously we don't have a crystal ball and things can change. That's why I have to listen to the show every day. But as of right now, I think we're overdone. We're overbought.
I'm sorry. I'll finish up on this, AB. I know you're going to hop in. What about Warren and Oxy here, Dennis? I mean,
well, here's an issue too. I see with Warren Buffett. He's selling Bank America. Yes, he took a small position. Which one did he just buy? I forget what he just bought. Alta. But so bottom fishing there. But we're talking and people are talking about Oxy. And I've been talking about the Warren, put basically because the guy keeps buying stock at 57, 58, 59. Warren Buffett, if you look at your Benzinga Pro, and maybe I'm wrong here, but I just went through it this morning. I don't think he's bought any stock since June. Now, again, when he had the meeting, you'll see that he bought stock, but that was old. Remember, he's over 10%, so he has to file every 3 days. There hasn't been any regular filings, since June. So has Warren Buffett stopped buying Oxy? That's a question. Is he full of Oxy? Because I haven't seen any buys lately.
So he bought for 9 straight days back in June. He owns, I think, more than $10 billion worth of Occidental preferred stock. I don't know if necessarily, like, if I were a big Oxy holder, I mean, is it great that he hasn't bought any more shares in the last 3 months? No, it's not great, but I also wouldn't be that concerned by it. I mean, he owns so much. I think there's a chance he just he feels adequately positioned with Oxy. If he started selling, okay, maybe that's a big red flag, but I don't think just the fact that he hasn't added more in the last 3 months is necessarily, the biggest red flag in the world. But if you are a big Oxy holder, you might be starting to ask questions about why he isn't buying more. But again, yeah, I mean, he just has so much already. I think there's a chance he just feels, all right, we've got a good position here. Now they're looking at other things.
So I just think it's interesting. Like we were seeing nonstop buying at 59. It's the reason that I own Oxy multiple times at 58, 59, 60. I don't own any Oxy now. And, some people are speculating, that, he may buy the whole full company here. That speculation was put to rest a while ago. It was CNBC, I believe, that reported it first. They asked him and he said his words were he wouldn't know what to do with it, meaning he wouldn't know how to run it. So he doesn't want to buy the whole company because his team wouldn't be able to run it. So that's why he wasn't buying. So when he said that, I mean, eventually he's going to hit a spot where he's just full of oxy. I think he's full now. And if he's full, you no longer have the Warren Buffett put. Just because he's in it doesn't mean there's not that constant buying. Like when you're buying millions of shares, every other day at a level, it holds the stock up. So that's gone. I think about the Bezos, 200 level on Amazon. He stopped the stock from going up basically in its tracks. Buffett was stopping Oxy from going down at 58, 59. Well, if he's not buying anymore, there's not that support from his buys out there anymore. So that's concerning. And that's down here at 56. So obviously it's going to trade off oil. That's what matters the most to Oxy here. But you no longer have Buffett support.
Final note on this, and then we'll move on to some movers. He's been buying this a long time. Okay, it's not just. Didn't he help them? I mean, what was the Anadarko? Yeah. So I mean, he was buying up here. I know he was buying up here at maybe 60, 70. Okay.
I don't know. I don't remember a lot of buys up there, but you could be right. I don't know what his average cost basis is.
Yeah, that's the thing. But no, I mean he helped that deal. And so he was buying, and then he did really buy off the bottom. It was August of 19. Buffett Berkshire bankroll Occidental's $38 billion purchase. So that was August of 19. So it was right here in this area. And then it got killed. And then he didn't really come in. I can't remember when he started to come in during COVID, but I think afterwards, after it stabilized, he got a bond to lean on. Then he came on and he had some great purchases here. So I don't even know what I mean, maybe he looked like his average price and he's like, man, oh man, oh man, a different environment. But that'd be interesting to find out what his average price is.
But the overall point being is he's just not a big buyer of stocks right now. And as an investor, I agree. I mean, I'm not a big buyer of stocks here either. I've got pretty good cash portion here. I'm with you, John, on the AI stocks. I think those are the ones you want to own. But I don't want to own them at 45 times earnings. I don't want to own them at price for perfection. You want to pull back. And I think, you know what? I think you're going to get one here eventually. But there are stocks that are going to go higher, and they're going to want to talk about those today. I think one of the most interesting upgrades here today is Unity. We haven't had any love for Unity whatsoever. This stock has been the dog of all dogs. The best thing I did, I said my best trade of the year was I sold my Unity at $39 and I bought Nvidia at $600, which is $60 with that money. I mean, that was the trade for me of the year because obviously Unity has went straight down and Nvidia went straight up from that point. Is there a time? I'll pose it to the chat. Has Unity bottomed? I mean, we had the 14 August 5th where a lot of stocks probably did bottom. It's come off. Now it just came back. Now you get a vote of confidence from Morgan Stanley with a 22 PT on it. Is Unity bottomed?
So the upgrade came from Morgan Stanley with a price target of $22. Upgrades Unity to overweight. So they were from equal weight to overweight. You've got Unity trading up now 6.5% on this upgrade. So we've talked about, not all analyst ratings are created equal, but Morgan Stanley has some more weight on the street than maybe some other. And when you have a stock this beaten down and you catch that upgrade from like a reputable bank or a reputable firm like Morgan Stanley, you can see this pop a lot of times. So I'm curious to see if other analysts come in because a lot of times you'll see them kind of piggybacking off each other. And if we see some other upgrades coming in today or tomorrow, I mean, yeah, this thing, Joel, I'll let you get the technicals, but definitely perking up on this upgrade.
Pretty easy setup here, and I'm not going to comment too much today on today's price action. You are up $1.13 at 17.50, 18. That's all the stock has to do. It has to. I mean, look at that. You peaked just over 18 in June, double bottom in July. Double top in July, double top in August as well. Now you're already up $1.12, so a lot of people are like, hit cha-ching, maybe take us short-term profits. But when this thing gets over 18, establishes an 18 bid, then I will say the bottom is. If you think it, if you're like yay Morgan Stanley here, then take a poke here up a stick. Know it may trade down a little bit and lean on the low of the move, but Man, that's a nice looking level there for Unity. That clearing
Major
that 18.
resistance.
Yep.
And when you think about a stock trading up 6.9%, it's like to go to 18 and might do it today because these things can get crazy.
Right.
It's only another 50 cents. Does it have the gas to like go to 19 right? I think it probably does have to do work, Joel. You get a little pop,
Yep.
then it probably needs to do some work at 18 before it gets. So the easy money probably made overnight here. And maybe it'd be more of a seller than a buyer at 18 saying, hey, we got a weak tape overall here too. It's not like we're buying this into a strong market. The overall market's fairly weak here this morning. And if we're thinking, September blues, I mean, maybe this is one you want to chase here. But, I agree with you. I think you put in some work at 18. I'm not chasing up 7% here today. Maybe we get some sideways action, make the chart look a little bit more productive. Then maybe, I get interested here. But it's on the watch list. I'll put it on the watch list. Then moving on, I'll just take control here. Boeing going the opposite way here this morning. We're sticking with ratings. One thing I just want to say on ratings is September, the first week of September is usually a very big week for ratings. Why is that? Because the analysts are back at their desk. They're trying to make their calls going into the end of the year. They're not on vacation anymore. Kids are back in school. You're past Labor Day. They're like getting those reports out there and working. So typically you see the next couple of days as a lot of major rating action. And the analysts have been quiet. August is a very quiet month. They're on vacation, August, dog days, it's not exciting. Now we're coming back. So analysts are coming in positioning here for the end of the year. That's why you're going to get some major calls coming out from the analysts here. Unity, obviously, a big call from Morgan Stanley. Well, Wells Fargo, big call on Boeing here, AB.
Yeah, we've got a double headline here on Boeing, kind of a double whammy this morning, bringing the stock down about 4%. You've got that Wells Fargo downgrade that you mentioned, downgrades Boeing to underweight, lowers price target to $119, currently trading at around $167. And the secondary headline, Boeing shares are trading lower ahead of the September 12th expiration of the company's contract with the International Association of Machinists, which could lead to a potential strike. Additionally, Wells Fargo downgraded the stock. So you've got a potential strike as well as the downgrade. The litany of negative headlines continues for Boeing this morning. So, this is just bag holder central in Boeing right now.
They just do nothing right. It's like the Intel of aerospace, and like this, obviously stranding their astronauts in space and then going to SpaceX to bail them out, and they got to wait up there 6 months. Supposed to be a 10-day mission. Just an epic management disaster. The stock has been for years and years and years. We keep thinking there's going to be a turnaround story. I've thought, 170. Maybe we're looking at, where we've done some work here, and maybe with the short-term bottom is in or the long-term bottom is in. Obviously 160, it did work back in April, tested it recently and held, which is good news. I think you do have support down here at the 160 area. If eventually it breaches that support, though, Katie bar the door, because then it opens right up. So I'm saying if you are buying and you're a buy the dipper here in Boeing, don't let it breach the 159.70 low back in April. I took your job away from you here, Joel, on the technicals, but this one was an obvious one. Don't let it breach 160. It starts going down through 160, and the stock could be at 140. So if you want to buy it, you got 7 points of risk, and then you'd have to dump it, I would say.
Ahead of that area, the 163 area, you had a cluster of like 6 lows in that area, 6 out of 7 days. So the area you're talking about, Dennis, I don't think it's like it could happen today.
No,
But,
not today. I don't.
okay.
Not even close. I'm
I don't
not
like to
saying
say
today.
never.
No,
But
I know what I'm saying is that's where I would
okay.
lean. So that's where if I'm putting a swing trade on, and this is all hypothetical, but if I bought Boeing today at 167.10, lifting the offer right now, I'm not doing it, but if I did it, I would say my stop out would be like the low of the move, which is just under 160. So you're risking $7 and saying, I'm going to take a shot that they're going to turn this story around here. And it's a shot because they haven't turned the story around in years. But, maybe, that's the low of the move. If it was to breach 160, I think you got to let it go. So that's my number.
Okay. I think that there's nothing but bad news on this stock. Whenever, always,
never has good news.
Yep. Always on. So, if you buy this stock, you just be prepared that when you open up the next day, or, you turn in your your computer, your Benzinga Pro, expect bad news. There's nothing but bad news on this stock.
So
Everything.
true.
And you know, so
So
what
true.
I think is going to happen with this company is you already lost your CEO, right? You got these strikes. Why would you, if you're working at Boeing right now, do you think you're on Indeed.com or LinkedIn? I mean, how could you have confidence working at the company when it's been in peril for so long? So, I thought they know they're changing the CEO. I think they're going to start losing employees saying, man, I can't take it. Then you get some of these higher level people living in the streets totally lost confidence on this one. So that's where I stand on Boeing.
All right, we do have some other pre-market movers to discuss. Before we get to that, I've got a question for y'all. Because I met a guy over the weekend just like playing pickleball at the park, and he started asking me, he's like a middle-aged man. And he's being real nice, asking me what I do, all this stuff, explained it to him. And he's like, oh, well, what stocks should I buy? I'm like, I don't know, man. I told him kind of what I do. And he's like, yeah, but you're younger. You have like 20, you can hold those stocks for 20, 30 years. What do you, because I'm sure when you guys explain what you guys do to people, people are like, ask you for some stock tips. And like,
Always.
what do you say? Like, because there's nothing ever like you can't be like, oh yeah, go buy Nvidia, because then if they do and it goes down, and that's what I explained. I was like, well, anything I tell you could go down 20% in the next like few months, but I feel confident that like the stocks that I hold will be up in 5+ years from now. But when people ask that, I think they're looking for something that they can buy and it'll like double overnight. And what do you say, Dennis?
I get the same thing. You get somebody, hey, if I gave you a couple $1,000 here, could you double it for me, over the course of the next week?
I'd be like, yeah,
I'm
I'll
like,
take
oh yeah,
Cardinal's money
sure,
up.
no problem. Send me $2,000, and I'll turn it into $4,000.
Yeah, you do that on
guaranteed.
Twitter all the time. You're making people rich on Twitter.
But if people ask me, so a lot of times, and it's difficult. Long-term investing is such a hard call. Like I'm pretty good at the short-term stuff, like, day trading and figuring out, and overnight trading and figuring out, when you got like a buyer and it's moving higher, and trading momentum, short-term momentum. Long-term investing is always tough. But I tell you, I get this question a lot, what's a stock you like long-term? If you just want to stay away from, basically short-term trading, what's a stock you like long-term? I tell every person the same thing now. And you know what stock, Joel. You know what stock I'm telling them.
Tesla?
Yeah, Tesla. And it's a good segue into Tesla here today. I honestly think Tesla in 5 years is going to be one of the most valuable companies in the world. I really believe that.
Before we get into Tesla, Joel, what do you say when people ask you that?
Well, it all depends, because that's such an open question. You said this guy was middle-aged?
Yeah, so like he was maybe, say 5-10 years away from retirement.
5-10 years away from retirement? And he's still asking that freaking question?
Yeah.
I mean, it all depends. I can tell you some advice that, and I would probably give the same advice today. I remember Mighty Joe Young, Dennis, Mighty Joe Young. He worked at Benzinga a long time ago. He actually was one of our. I don't count him because he wasn't a producer for a really
all
long
know
time.
Joe. We remember Joe.
Mighty Joe, and he asked me that question, and it was a long time ago. And I said, you're young. He was just getting married. And, who knows about stocks and everything? I said, you should start buying the S&P every single month. Whatever you can afford to put in your salary, put it in and forget about it. And when it goes up, don't get too excited. When it goes down, don't get too excited.
Good advice.
Yeah. And, because what am I going to say? Oh, Apple or this or that or anything. Now, and also I'd say to that guy, man, like how much did you know where interest rates are? Do you know you can get 5-6%? I mean, that's not bad money. I mean, who knows what kind of environment, we're going to be in. But, for the youngsters, that's what I say. If you're an oldster, coming up at these markets, there's a lot of, utilities, boom, boom, boom. Yeah, they're boring, but there's things to do. So it's really
I've done
different.
the same thing. Like I really am conservative with my long-term investing. I have some flyers, but I'm very aggressive with my short-term trading. So I'm very conservative with my investing. The majority of my money, long-term money, is in real estate. It really is. My majority of my money is probably in real estate. And then, I've got all kinds. I've got a solar project. I've got different. I'm kind of very diversified. But when you know, and I've got some sitting in just cash too. Like I was getting 5.72%. You know, I had some preferred stocks before, Joel. And when the GIC rates came up to 5.72, I put some of that over there too. I'm all over the place. But then I've also got, you know, Nvidias, I've got Teslas. So I'm just very diversified. And again, it matters how old you are too. To your point, like, I mean, if you're 20 years old, 25 years old, you got to get aggressive. That's the time to get aggressive. You know, Joel being 80 years old, he's got to, you know, slow her down a little bit.
Yeah.
And obviously, you know, I'm thinking, and I probably never will retire from trading, but you know, you want to slow down eventually. And you know, you think about like 6-7 years, I want to slow down a bit. So I don't want all the money that I made trading, I don't want it to just all of a sudden go away because I took some flyers and the market crashes. What our biggest problem, Joel, is we've seen, you know, somebody just starting in the markets hasn't really seen, you know, like a big crash. Like I lived through the tech bubble when the NASDAQ went from 5,100 to 1,100. 81%. The NASDAQ fell 81%. I lived through that, you know, and I looked and I was like, it turned me off of like, you know, investing because you go up, 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 and then boom, you know, you lose 5 years or 7 years of gains just like that. And, you know, but if you can just ignore all that, long term, the markets do seem to go higher. So just slowly a dollar cost averaging into the S&P is probably a good way as well. But, you know, it's not as fun like that. And we like to have fun on the show. And that's why I was like, oh, I go Tesla. And it pisses half the people off. And half the people are with me. Half the people are against me, you know. So it's kind of fun. But, you know, my long-term, I've always said, my long-term performance, somebody just asking me, do you beat the S&P long-term? I've never tracked the long-term performance of any of my accounts. It's across multiple stuff. I've got real estate, you know, all this other stuff. I don't know. Short term, I do track it. It's right in my IB statistics. So I post it every month for you guys. I know I'm a very good short-term trader. I think I'm an okay long-term investor, but I'm too conservative. My biggest problem with long-term investing is I'm too conservative. Preferred stocks giving you 7%, you know, like grabbing, you know, a little GIC of 5.8. Oh, we'll grab some Tesla and that'll pick it up. I'm too conservative in my long-term investing, but I'm older now too.
Yeah, and that's where I struggle too. When I have friends my age asking me, I'm like, "Yo, just make it a recurring investment in the S&P 500.
It's not a bad idea.
Delete the app, and then thank me in 20 years." You know, and I feel pretty confident with that advice. But when someone like this other guy that I met over the weekend was asking me, and I did mention, I was like, "Well, you know, like 5% is not bad. You can just go buy some T-bills right now." And then you know what else he asked me? And sorry, we'll get to Tesla real quick. He was like, "Do you think Berkshire stock will go down when Warren dies?" And I was like, well, like it might dip that day, but I was like, they've had a succession plan in place for, 10, 15 years. I was like, if Berk B does go down, 2-3% that day, whenever that does happen, I'll probably be buying it. Like I would see no reason why not to, because the underlying holdings of the company will still be the same. I think the strategy will still be, pretty much intact. And obviously, there'll be some question marks about what the management will be like going forward after that happens. But like, I wouldn't be scared of buying the dip if and when that happens.
I got another opinion on this, and it's not mine. I saw it on Twitter from Tracy Roniak, that joins the show from Zach's, and you know what she said might be a possibility.
What's that?
Maybe just closes up shop.
Really? What would happen?
What
would happen to the billions? What would happen to the billions of dollars that they're
distributed to the shareholders?
No, none of that. You want to know?
You can't replicate that performance.
None of that
is
going to happen.
I said it wasn't my opinion.
That's crazy talk. I'm just ending that. That's just crazy talk. We don't want to go any farther than that. It's just starting bad rumors here. That's not.
I'm not starting a bad rumor. I'm saying what he made. I mean, what? Do you know how difficult it's going to be? Who's going to run that company?
They have succession planning in place.
Yeah, they have a guy.
The guy's 95 years old. I mean, odds are not with him. He is, the 6 Cokes a day have preserved his body, and, obviously more so than most people. And we joke 6 Cokes a day. But remember at one time he said I drink 6 Cokes a day.
In the
so I've always
was it Diet Coke or regular Coke?
Regular Cokes.
Oh, yeah? He's right there, like, screw diabetes. He's 95. When you're 95, you should be allowed to drink 6 Cokes a day. I'll tell you what, if I make 95, I'm going to drink 6 Cokes a day too, because who cares at that point in time? You beat the odds. You should be able to do whatever the hell you want when you're 95 years old. That's what I say. That should be like a law. As long as it's not anything criminal. You want to go and run around naked in the streets. You're 95 years old. Whatever you want to do. Joel wants to go do handstands on the lodge. He's 95. Give him a chance. But the issue that you have with just liquidating it all is the premium, and this is a conversation to have. The premium that Berkshire trades above net asset value. And it trades with a significant premium above net asset value because Warren Buffett and his team. So I think, AB, to your point, if Buffett was to just drop dead tomorrow, we'd hope he does. And I want to see him live to be 100. But if he was, Berkshire probably falls 5 to 10%, like 5 to 10%, like serious. But, we've seen before with Apple, we talked about Steve Jobs. If Steve Jobs, when we first started the show, ever obviously died, then Apple was going to fall significantly. It fell a bit, but it really didn't fall as much as you think it is. Difference is Berkshire's a fund, and it's trading 1.39 times NAV. Now, that's a number that people estimate because all the private companies, it's hard to actually value it perfectly there, but it trades with a substantial premium to NAV. So that premium comes out, not all of it by any means, but I think it falls, 5 to 10% would be a good guess. And maybe you think about that, but how's the succession plan? All that, looking at that. So, anyways, I know I'm talking over. So Scott's waiting in the background here. We want to get Scott in here too.
As soon as you started talking about 95-year-old men running, barren in the street, that's when I knew it was time we need to bring our guest on to bring us back.
The opposite.
Yeah, so let's go ahead and bring our man Scott Redler, the Red Dog from T3 Trading. He's hanging out backstage, going to join us this morning. Let's give him our special welcome, and we'll catch up with Scott when we get back. All right, Red Dog, how's it going? I'm coming to you. Can't see me, but you could hear me. How you doing, Scott?
I'm doing all right. You know what? I was actually sitting in the backstage in the green room eating my what'd you have, bonbons and M&Ms for me, and I was listening to the conversation, and it's just, it's funny stuff. Like, you guys are getting older like me. We've all been experienced. We've all been around, and I have friends also come to me and say, like, what should I just be doing in this market? And some people are like, you're an active trader. Do your gains outpace, the S&P? If I just put money in the S&P every month, how should I do this? How should I do that? And I feel like over the course, I started in 1997. When did you guys start? Dennis, when did you start? Joel, when did you start?
Actually, that's funny. 1997, I believe, retail, and then I went professional with Bright Trading 1999.
So we experienced the tech bubble bursting in 2000. We experienced the financial crisis of 2000, 2007, 8. Okay, it's actually my son's 16th birthday was this weekend, and I got him the card, where it says what happened in 2008, and it's talked about the financial crisis, the housing crisis, every crisis underneath the sun, So we were trading then, at a friggin' 3 to 6 month old crying for 24 hours a day. So I'm like, wow, I really handled a lot back then, but. We also learned that, if you put money in every single month over the course of time, it'll help your average cost. And that's what my wife's long-term account did when she was working at UMDNJ, which is now the Blood in the Street account, which I'll get to, and then there were people that blew up, right? People that blew up if they bought a dip too early in 2007, 2008. And then there were people who blew up that said, hey, we're not going to continue this rally. We have to test levels, and they blew up short. And then you had the pandemic, which is, I think, where we were all had our best year because we learned, that things can go lower faster. We can get out of the way, and things could bounce back and not go back and retest. And, the things bounce back so damn fast in the pandemic, that there were guys that, blew up buying too early and shorting too early, right? Those things happen every friggin' which way. So this summer happened, right? July, we fell like 9-10% from the highs. So the same thing happened, right? Some people blew up buying too early into that Monday. That was chaotic. And then, some people probably lost money in the last, part of this rally, because a lot of people were saying that we were going to fail at like 545 in the SPYs after a move from 510, and we went all the way back to highs. So a lot of different ways to make or lose money. So you have to know your time frame. So the fact of the matter is, if you do not trade actively for a living like we do, you probably should just do a 401k funds every single month.
Yeah.
And then when you see markets in turmoil, add to it. Put money, put an extra, monthly install, and then that's how you get your alpha. But the reason why we do what we do and people follow us is because there are people who trade for a living that need to make money and time the market in August. They need to make net money in September. Or they get paid quarterly. So that's why, we do what we do. We have our rules. We have our process. Sometimes we feel awesome. Sometimes the market's a pain in the arse, and that's why we get up so early, because it's not easy to carve out pieces of stocks and charts and whatnot. And otherwise everyone would be doing it. And I don't know, a lot of people still doing it from when we started. There's a handful of us, but it can be done. And, you have to make sure you're just even keel enough to, when things are choppy, like the last 2 weeks in the S&P, where it looked like we were going to break below 557 in the SPYs, and then above 563, then below 557, we need to just, not get too frustrated and just wait to see when the range does either break below or break above, and make sure we're not worn out enough, which is what I think traders are trying to figure out right now. Are we going to hold 557 to 560 and have one more move to the upside, before we get into the trickier part of September, which is closer to like the blackout period where stocks can't do buybacks, September 14th, 15-ish.
So Scott, talking about a shorter time right now, we've seen I'll pop your charts up. We've seen some, I'll say, usual perma bulls, Tom Lee coming in, getting a little cautious. I mean, looking at the short time frame here after Nvidia's earnings last week, and not necessarily the disappointing earnings results, but the disappointing reaction to the earnings. Does this worry you about the overall market, that some of these leaders, you're seeing some of the wind come out of the sails here?
Well, first of all, I got to say, I love Tom Lee. I like a perma bull better than a perma bear, because historically the market goes up. But I think he was kind of irresponsible. Like, he was talking about, we're going to have a 40% move in August for the IWMs, 40%, right? So that squeezed all the excess shorts out, got people all like antsy. And the IWM is, I don't even know what percentage off the highs. He was saying here, like, remember here back into the Fed?
Yeah.
This was when it was calculated. We had the first move on the CPI. And in here, he was still saying, we have another 30% before this breakdown. And now we're rebuilding here. And he's saying for the next 7 to 8 weeks, we could go down 7-8%. What just happened to his 40% call?
That's what I was saying this morning.
It's like, what the frick? Come on, Tom. You could be a
stay
perma
consistent.
Yeah, stay consistent. Or if you're going to change, that's fine. But when you're up here like this, don't be a cheerleader when things can get a little bit, out of whack. So I don't like when things like that happen, because same way, who was that Morgan Stanley guy that was bearish and right like 2 years ago, and then he stayed bearish for the 2 years back to highs? Mike Wilson. It's like, so you have to say to the traders, guys, you can't fall in love with analysts, because they're talking out, they're not trading, they're not making cash flow monthly or quarterly. That's our jobs. So that's why I keep the TV off for most of the time until 9 o'clock, and then just have it on for background noise, because a lot of them they just don't do what we do short term and actively. So like you said, Nvidia. So let's go to the SPYs real quickly, because this has been a tough range, right? Here you go. Like I was saying before, you had this V bottom. This was easy for us kind of traders, as it was buyable. The VIX was through the roof.
Yeah,
we're 10% off the highs. That was the calculated trade. That's when I bought the blood in the street account. And then this is when it got really tougher. I don't know about you guys, but right around this 540-ish, where people like, that's where we're going to at least pause. That's where I started to get a little extra hedged. And then you went up another 4 days in a row. So that was like that spot. I feel like the pain trade started. So anyway, here we are above the 8-day, 1, 2, 3, 4, 5, 6, 7, 8, 9 days of hanging here after a fast and furious move. My experience tells me, we probably should break above this range, because we took back all these levels so fast. But, there are some things that could hold it back. The spookiness of September, whatever, which I don't think happens till mid-September. But then again, like you said, is the SPYs going to be able to break out if Nvidia wants to see 108? It's going to be hard, right? Hard for the SPYs to break out above this area. If this 116 area, I'm watching this 116 today. If it breaks this and stays below and works to 108, chances are the morning weakness isn't going to get absorbed. So that's like how I'm looking at it a little bit. Maybe it breaks below it and then comes back above it. That could relieve pressure. That's that red dog reversal, kind of bottom tail trade. If it happens, that would be like something like this. It goes below, shakes people out, and then comes back above. And then maybe you have like, a low or higher low, a higher low, and then it gets better. But if it's going to work its way down towards 108 or lower, chances are the semis are going to continue to lag, tech's going to continue to lag, and the S&P is going to be in this choppy range. So that's how I'm kind of framing my week.
It sounds like you start the week a little bit cautious then, Scott, like until you see a signal that you can get more aggressive, correct?
I came in long because of the way we reversed and the way this range was on Friday. And I'm kind of cautious, saying I don't want to lose more than I need to if it was a trap. I don't know, like, did you guys come in net long? Are you net short? Are you net neutral? For me, I'm net long. What?
Yeah, I came in neutral today, but yeah.
Okay, well, if you're in a better spot than I am.
No, but that could change in a hurry.
I'm just saying,
I'm usually neutral. I'm usually neutral overall, though. I try to trade market neutral most of the time. But
really,
I mean, I'm looking at
momentum.
It's a tough. But what you were saying before, like, and I was just actually in the background. You were talking about the August 5th blood in the streets, and I was just looking at my own like performance for August, and it's funny that August 5th week was my best week of the year. That August 5th day, or was it the 6th? I don't know if it was the 5th. It was the 5th, right? 5th. That August 5th was my best day of the year. And then the next week was pretty good. And then the last 2 weeks kind of sucked. So I'm like, it kind of went with exactly what you just said, Scott, is I went from this month, August is going to be awesome. Just had my best week of the year. And then the next week was pretty good. And the last 2 weeks sucked and I didn't even beat my March. And I'm like, well, how the heck did that happen? It wasn't, it just wasn't, the last 2 weeks have been tough.
Well, you had the last third of the up move that constructive or risk averse or even prudent guys like us have been doing this. We're like, okay, maybe we can catch the other side a little bit and got hurt. Then finally, when we start to settle after 4 days, like, oh, now we can go up and didn't, or we got to go down and we didn't. So I get it. And I've spoken to a lot of traders. Like we have over 900 or maybe even 1,000 associated members of our BD for prop trading. And, like you said, a lot of our guys, while the world was in pain or worried about their statements, we were out of the way short into August 5th and then made good money. And then while they're all excited, we're back to highs where, the market's up and you come home and your wife's like, how'd you do today? The market was up and, you lost money because you're trying to be cute overhedged with a short. So, a lot of people said the same thing. I spoke to my friend Pete, who was one of the biggest billion-dollar funds in the world. And, he's been having trouble. He's not doing it there anymore. He's just managing his family office and he's having trouble. So a lot of people that I know that have been doing this for a long time did not have a great 2 to 3 weeks. So I'm not trying to be like misery loves company, but that's how tricky,
it's been easy the last 2 weeks.
And my trading spirit's a little down, and I'm like, so I'm trying to think to myself, what do I do here now? I'm like, if we do not hold 557 today and we close below, which I'm not going to say has happened, I might have to just wipe out a lot of my positions and stuff and say, hey, I'm going to just day trade for a little while because, I don't want to lose excess money for no reason. I don't want to be anticipating a move above 563, 564 and be in 6-7 names and it not happen because we roll over because more people are looking for that now. So my trading hat saying, okay, what am I going to do to keep myself mentally positive and on alert to make money and piece it together until we get better trading action, whatever that means.
Scott, I was just, looking at the years that you talked about, 2000, 2008, 2020, and now we're in 2024. All those presidential election years, right? All those years and different things. How do you, we could talk about the charts and we could talk about the fundamentals. We could talk about the valuations, the S&Ps here, but I think that all these times, those were great buying opportunities, right? With the crises and everything. How do you keep the geopolitical? We are at a point in our country and our world where you would think things are you should be extremely bearish, the way things are transpiring. And I think you know what I'm talking about. How do you separate all that when what kind of potential risks are out there?
Well, it depends on your account, depends on your risk, depends on your threshold. If I'm 51 years old and I have a 401k, then I put money in every single month as a chief strategic officer. I don't care. It'll help my average cost the same way the other crisis has happened. But as an active trader who trades for a living, if things start to get temperamental, like, you go back to the chart, before the 9% move lower, look at this candle on July 18th. We broke the 8-day moving average. We had a gap down that never got filled. So technically it said the market cares about whatever the narrative was then. And then we, were below all the moving averages the whole way. Listen, the other presidential elections, the same thing happened. They said the world was going to end when Trump got elected. It was down that night and then never looked back. They said the world was going to end when Brexit happened. The world was always going to end, and it doesn't end. You just need to know how much risk you have on. I tend to take more options when we get into areas that anything could happen, because risk is premium paid versus being caught in a mess that you can't control. So as traders, maybe you have a little less on because there's enough volatility that if you get paid for the month, you could short a huge gap up, and if it doesn't pull in, you could flip and buy them and use your charts. And if big gap down, you could do the other and you could make money tactically. So I would say when we get closer to these binary events, whatever they are, and it's going to probably be the election when we move closer. First one now will be the jobs report on Friday, because the street thinks we're still getting 1 basis point worth of cuts, and looks like we might get a quarter in September. And I don't think we can get 1 basis point unless, Tom Lee is now changing his gears and we're going to go down 6-7%. At 6-7% down in October, hey, maybe we go a quarter, then a half because of sentiment. Remember when we were down August 5th, what's his name on TV was crying for a 1 basis point cut that day, and we were still up 11% in the S&P. What the hell is that? So, I'm just thinking that, these binary events happen. You just have to know which account you're looking to focus on and what's in harm's way. But long term, it doesn't matter. Obviously everyone thinks like, I don't want capital gains taxes to go up. I've paid 50% all in a bunch of years. I want to keep more than half my money. So I'm capitalism, free enterprise. I like to help. I'd rather pick which charities I want to give to than them take my money and distribute it whichever way they want, whoever that is. But I'm not going to name names and get political. What do you say, Joel? Do you want to keep some more of your money, or you want to give more of it away for the greater good?
You know where I'm at. I'm also quite a few years older than you, and have been, in the markets, well before 2000. So, that's just my viewpoint. If Dennis thinks he's conservative, I'm even more conservative of him. Not selling stuff, but just the appetite for buying is it's just not there.
You're a little older, Joel. You might need to, do some more bonds. No,
So
What's
Scott,
wrong with that? What's wrong with
No,
5, 6, 7%? I don't understand that.
Scott,
there's nothing wrong with it. I'm just, if someone's 30 years old, I wouldn't be looking
Exactly.
for 401k
Yep,
because,
that's exactly. That's
because the
exactly.
election's happening.
Yep, time perspective on things.
Yeah, exactly. If somebody's 77 years old, not saying you are, you look not a day older than 45, but maybe a little older than that. If you're 75 years old and we're 1% off all-time highs and you're worried about how much you're going to live on, you know what? You take your equities down, over the next 3 to 6 months, just in case, because you don't have the same time horizon as, somebody in their 30s,
Excellent.
40s, or 50s.
I agree with you.
All right,
Excellent. Excellent way to handle that, Scott.
Scott, next week, I know we've got some fireworks. On Wednesday, we'll get the CPI report. Looks like you'll be holding a room that you're going to be talking about trading into and after the CPI report. We've got that QR code on the screen. We've also got the link in the description of the YouTube channel. I'll drop it in the chat as well. But what are you going to be, looking at next week as we head into the CPI report?
Well, let's see where we are. Let's see, are we at above 564, 565, near 570, or did we pull back towards below 557, 554, and 5, and at that gap? People are always like, what are you going to look at in 2 weeks from now? 2 weeks from now, the world could be a different place. It could be a different place in 2 days from now, technically. So we'll see where we are. We'll see where it is. And, for around here, hey, you got to look at the small caps. You got to look at the bios. I personally think the bios are set up for higher prices. So that's one of my bigger positions right now. But, it also feels a little vulnerable like everything else. So if you look, let me go, I'm a trend spider right now. Let me put up the XBI. Yeah, here's the XBI. Here's your inside range. It looks like a much bigger cup and handle pattern. I would think if we're going to hold in here, and if we're still in a little bit of disinflation and we're going to get close to 1 basis point in cuts, or 75 basis points, whatever is 100. I'm sorry. That we could get above 102, 103 in the XBI to get a better move. You would think. You look at the weekly chart too. The weekly chart, this was 174. In 2021, it was 124. Now you're hovering right here. I would think that this could be a good spot if that narrative plays out, where inflation continues to come in, the Fed could reduce rates. I would think that this sector would be a good sector to focus on, for the fourth quarter. But that's a lot of things that have to happen. But we'll see where we are next Tuesday, which feels like miles and miles and miles away for now. Let's see what happens today.
Well, there you have it. All right, Scott, always a pleasure to have you on Pre-Market Prep with us. Again, Red Dog coming to us from T3. We love our T3 Tuesday. Scott, enjoy the rest of your day, and we'll catch up soon. Thank you very much. And listen, if every day, if you want to get the active complexion, see what's in play, where we can make cash flow, you come to T3 Live. We have people on the alpha teams, over 500 professional traders that are trading for a living, trying to time things. We all do it together. There's strength in numbers. You don't need to do it by yourself. There you have it. All right, Scott, we'll chat soon, and take care. Stay green. All right. Thanks. All right, guys, that was Red Dog, Scott, Redler, Joel. It's just you and I now for the last few minutes. Where do we want to go? Let's see. We've talked. Should we do some earnings preview? We do have.
There's not much, but let's go ahead and do it.
We got what? Zscaler getting ready to report tonight?
Yeah, Zscaler. Let's see. Boom. Let's take a look at the charts. I'm not sure what the expected move is. Nice move. Nice rally off the August low. I mean, it looks like someone's just patiently parceling out here at 200. You had multiple highs in this area. The recent high of the move, 202.64. So catches a strong bid. Really, there's really not much between 200 and 220. I think that's pretty a careful area if it catches a strong bid. On the, if they just decide 200, a little bit too much too fast on this move from 156, that's a 44-point move, right? 22, that would put you at the right about the 170, 172 level, just giving part back. So if you're looking to buy the dip, but tight range here, consolidating ahead of the report. Wouldn't look for any real serious downside, at least this week, or well, no, actually the report's tomorrow.
Tonight.
Yeah, tonight, 193. This is like a curveball. I mean, it's just hanging. Kind of, I don't want to say, but it kind of reminds me of the Nvidia chart before earnings. Just kind of had a rally and just kind of hanging out.
Got a higher bar, because that's the problem with everything reporting right now is we've had such a run up in August from those lows that the bar is higher for so many stocks. And that's where you're running into, and you look at everything else that's reporting this week, it's all the same story, like Broadcom. It hasn't run up quite as far, but way off the lows. You got Dick's, it's going to report. DKS is going to report Wednesday night. It's going to be a big retailer report. Well, it's up from 185 to 236, right up at resistance. I mean, the bar from the technical perspective on all these stocks is really high. This is why, I've always said, from an investing standpoint, you need to combo the fundies and the technicals, because when you get a run up like you've just had where stock was up 20% in 3 weeks, it doesn't matter if the fundamentals could be awesome. A lot of that could be priced in. So that's the difficulty this market runs into, is that there's just it's been such a run up from the lows on August the 5th. That it's going to take a lot for those stocks to go actually higher. AB, you in the? Oh, AB's on mute.
Oh, sorry. We have 1 more minute here. Real quick, we do have some news here in US Steel. Taking a hit this morning, trading down about 4% on comments from Kamala Harris saying that Kamala Harris says US Steel should remain American-owned and American-operated. So, of course, this company got an acquisition offer from Nippon Steel out of Japan. And if you go back to the day that this was announced, I remember, I think we were saying on this show, I was like, look, you think that this is just going to go through? No problem. US Steel. The company is called US Steel. You think this is with how much antitrust, other deals have gotten scrutiny from this current administration? You think U.S. Steel is just going to go over to Japan willy-nilly? Not a chance. So
No.
you saw, again, those comments coming from Kamala. The stock got all the way down to, where did we get to, Joel? Below $36. Then it got bought back up this morning to 36.5. But you're seeing some volatility in the old U.S. Steel this morning.
And the people will say Cleveland Cliffs will be the bailout here, but we know the Cleveland Cliffs CEO has been interviewed, and he said his bid would be in the low 30s. So you're sitting here at 37, and whether they're going to bid at all, I mean, Cleveland Cliffs just may not be in the spot right now. The stock is getting just crushed. They may not even be in the spot to be the bidder for U.S. Steel here now. I've argued for a long time, and same thing, AB. Like we said it when stock went to 50 that day. We all talked about it on the show that day. It's like, this is not going to be an easy thing to pass through antitrust, not when it's called U.S. Steel. So 36.50 we're down to here. I think downside, if the deal doesn't go through, it's back in the 20s, 29, 28. So, and again, people think Cleveland Cliffs going to buy at 35, 36 anyway, so I have all the upside. It's not going to be, and even if Harris doesn't get in, you think Trump's going to be worse on this. Yeah. You're not going to want U.S. Steel to go over Trump. It's both administrations. That's one thing they would agree on here probably, is not easily allowing U.S. Steel to just be taken over by a non-U.S. company.
Yeah. All right, Joel, do you want to give some quick technicals?
We're leaking here. We tried to rally. We're not. We're trading on the lows of the session. You're going to be looking at Friday's low was quite a bit lower, closer to 5,600. So that's where your support is. Actually, Friday's intraday low was at 55.98. That's the next daily level of support. We'll see if buyers come in off the open. I think what the Dennis mentioned, people were leaning the wrong way. You had that really strong close. I was watching it, and the only thing I was thinking of last night for a strategy, and thank God I never got executed, was we're going to break out over 55.70 or 56.70. We're going to 5,700. And it tried a few times last night, but it couldn't do it. So we're in a trading range, and I think you're going to have another nauseating week trading range until you get those jobs numbers on Friday.
There you have it. All right, guys, 9:02 a.m. We've got a couple minutes over here this morning. So time to wrap up pre-market prep on the shortened week. I was going to say it's Monday, but it's Tuesday. So we only got a few more days now. Joel, who do we have coming on with us tomorrow?
Jim Tassoni is going to come on from Armor Wealth Strategies. He's going to come on and give us his look at the market here at a very, very important levels, important area.
We've got a stacked list of guests this week, I do have to say. I mean, only 4 days of the show, and 4 great guests coming on this week. So well, that's just a little tease there. We'll let you know who's coming on Thursday and Friday tomorrow. But all right, guys, thank you to everyone who tuned in on pre-market prep with us this morning. We will have live trading starting up right after this. Smash the like if you haven't already, and we will see you guys tomorrow morning.